Welcome back to the IB Investor channel. Today I'm going to talk a little bit about Hexatronic and we're going to go through its latest earnings. And also, in light of the very high price fall today on the earnings report, I figured it was worth to take a further look under the hood. As mentioned previously, they just recently reported their Q3 earnings. And we're going to go through the cash flows, we're going to check the earnings, obviously, we're going to check the debt situation, and also the short situation of the stock. Before looking at the financials, we're just going to look at the stock price that I took from my stockbroker real quick. And yeah, we can see that this company has had a very good growth for many, many years, and the stock has in total return almost 3,000% over this period since 2008. So it's one of the best performing stocks out there on the Swedish stock exchange, regardless, even after this huge drop in the share price. We can see for the 3-year period that the stock has returned 110%, which is really, really good. And we can also see for the 5-year period that the stock has returned almost 170%, which is also very, very good. However, the bad thing is the stock has fallen quite a lot from this period, which I think is the end of 2022. And it's been just falling and falling. And we can see here year to date, it's fallen more than 81%, which is very tough, obviously, for the shareholders who probably purchased the stock here, because it's oftentimes with many of these growth stocks that most shareholders don't buy the stock here. But most shareholders buy the stock on the way up, and when they see that the stock has returned some good return for themselves, they often, back up the truck and load up more. So I would suspect that many shareholders loaded up massively here on the top, and then, somewhere around this period, I don't have the exact data, but I know that the CEO offloaded some shares, or insider offloaded some shares, and we can see also the big drop here in share price. And unfortunately, I think many of these 51,000 shareholders that Avanza, my broker, has, most of them are probably in the red right now as the share price has dropped so much. And often in these kind of cases, when they fill up here, they often keep on buying and just reduce their purchasing price. But it's just, it's one of those stocks which it has performed well if you owned it for a long period of time. If you bought it recently, you're probably in the red. So the big news today on today's earning report were that the earnings actually went down quite a lot from the previous quarter. So here we can see quarter by quarter comparisons. So Q3, the most recent one, and then Q2, and then Q1 for this year. So actually during Q1 to Q2, we actually saw an increase of earnings per share going from 1.1 up to 1.3. We also saw that the net sales went up actually from 2,100 million to 2,200 million Swedish kroners, which is nice. But then in the most recent quarter here, we saw a reduction here in both net sales, but also in profits. So the reduction between 1.3 here down to 0.85 accounts for roughly 35%, which is quite a big drawdown. Looking at the free cash flow situation, we can see that the free cash flow margin has been negative for the trailing 12 months here by minus 15 or almost 16%. It was also negative during 2022, and very negative during 2021. We had some years here where the margin actually were positive, but this could be the case when a company invests a lot of its cash flows into acquisitions and so on. Then the margins can be lower. But certainly here, a long track record of negative cash flow margins. This is basically a repetition of the previous slide. It's negative free cash flow in kroners per share. We can see that for the trailing 12 months, they recorded a 6.1 negative free cash flow per share. and it's been the case for the past 2 years here as well. We do see that they had some positive years here as well in 2020 and 2019, but it's quite small. Obviously, depending on the share price, because I don't remember exactly what the share price were here, but still, the kroners, in terms of kroners, it was quite low. So if we take a closer look at the cash flow situation here, we can clearly see that Hexatronic is spending much of its cash flows on investing. So, and do please remember that this is the quarter-over-quarter comparison, so not year by year. So we can see here from the most recent quarter, they spent 369 million, on investing, while the operating cash flows were only 107 million in the quarter. So we can see here clearly that we had a quite large negative free cash flow, and it's been the case for the past or two most recent quarters that the investing has been quite heavy. We can also see here in Q1 they made a lot of investments, 722 million Swedish kroners here, and we can also see how strongly related the free cash flow is, or how affected it is. So very much in the red here, and at the same time they only posted a 28 million operating cash flow. So for this type of company, it currently has a 5.3 billion Swedish kroners market cap or something like this. They should produce higher cash flows, and I think this has been one of the short thesis cases where they said that the cash flows were quite strong, and I do tend to agree that obviously they have made a lot of investments, but we can also see that the operating cash flows are not that strong. It's one thing that you have really strong operating cash flows. I mean, then you can do a lot of investing, obviously, but if the operating cash flows are weak at the same time as you're investing a lot of money, it's often not a good sign. And again, looking at the cash flows, but this time in comparison to net debt, we can see that the net debt is increasing almost every quarter. We're checking quarters here again. However, the operating cash flows has been slowing down, or did slow down here in the most recent quarter. And this is kind of worrisome because the net debt is going upwards whilst the operating cash flows are going down. So the gap is actually increasing here. And it'll just mean that it will take a longer time for this company to pay off its debt. And obviously there are some companies on the stock exchanges out there that are debt free, and this is certainly not one of them. And this is worrisome to see that this gap is actually increasing. It is one thing here where we see actually that, in the second quarter of 2022, where, Hexatronic's management decided to, reduce their debt whilst the operating cash flows were increased. So this is actually a good sign, where the net debt and operating cash flows are meeting, they're becoming closer to each other. But looking at this, where you see from one quarter to the next that the gap is widening, that's never a good sign. Continue with the debt situation. Here we can see the net debt to EBITDA for the trailing 12 months here for the most recent quarter, and we can see that it's increasing at a fast pace. It did increase at roughly 57% or something like this from 2022 up until the trailing 12 months most recent quarter. However, I do want to say that a 2x multiple, it's not bad in itself. So, I mean, I shouldn't bash at this company for saying, it has a 2x multiple, because it's not that bad. There are many companies that has much higher ones, but considering that the earnings are going down, cash flows doesn't look great, I think that this could potentially worry the investors, if anything. But there's still going to be a Q4 for this year until we get the full report, but management has already signaled that Q4 will most likely be in line with the Q3 report. So we can probably assess that this number is not going to improve, I think. The company Hexatronic has been a pretty famous stock on many of the social media platforms, and especially the ones I'm sitting at Twitter. It's been a lot of talk about the stock, and obviously the stock has returned a lot for investors holding the stock for a long period, almost 3,000%, as I mentioned previously. So there's a lot of investors who's probably in their greens still with the stock, but the stock is also very shorted, as we can see here from this page here. And this is like one of the official pages here in Sweden, where we can monitor the short positions. We can see that the company has almost 10% of the total float is being shorted, which is one of the highest ones recorded in Sweden right now. So I listed some of the other contenders here on this list. So SBB is the highest one with just above 17% of the total float being shorted, followed by JM AB, 15% and a half. And then on the 7th position, we have Hexatronic. So oftentimes when a stock is shorted this much, it's often something which is happening within the company. Often insiders are leaking out some inside information about stuff which is probably bad. So it's more often than not a stock which has a high amount of its total float being shorted. It's often a bad sign, and I often try to stay away from it. Now for the remark from the CEO in his latest or most recent quarter. We can see here that he's saying that the order book is being reduced here from 5 months. They've had the luxury during the pandemic years to have a order book of 5 months, but he's saying now that it's going down to 2 months. And the CEO is also saying that they were actually used to having a 2 months order book pre-pandemic. So it just helps to have a longer order book, I believe, just to give the company a better forecast. They can do much better planning. They know better in what type of investments they need to do in order, to make sure that those orders are being produced in time. But having a shorter order book just means that, the forecast will just be shorter. So that's the negative part about having a shorter order book, but still having 2 months is still quite good. I know some companies that, they don't have any order books. It's just, the customer orders something and they have to ship it or produce it like straight away. And maybe they only have a couple of days of order book, but 2 months is quite good for a company. That gives them some opportunity to actually make some long-term planning and better forecasting, obviously. We can also see here that he mentioned the stock levels being more normalized in their warehouses, and he's looking for some gradual recovery of the market from the second half of 2024. Now the question is, do the investors that currently holds the share, or maybe shareholders, let's say, do they have the patience then to wait until the second half of 2024? And you have to remember that many investors normally don't have very good patience. If they know that it's going to be, another quarter after quarter after quarter, which is going to be bad, because it's still going to be 3 more quarters here until we are at the second half of 2024. So I think this could put some extra pressure on the stock, but we got to remember today that the stock were down more than 20% during trading today. It could be that it closed at positive. I'm not sure. I don't think so, but at least it was negative more than 25% when I last checked a few minutes here ago. So I think the stock has had a lot of pressure already. As you saw before, the stock were already down like 80% or something like this year to date. So yeah, it's been really tough for the shareholders, and it's really trying their patience, I would say, here for this moment. Now, this was it for this short summary of the latest earnings. I don't know so much about the company itself. I just thought it was interesting just to check the figures. I might do a more deep dive concerning some products and so on in some future video, but right now I just thought it was interesting to check what was under the hood, considering the big attention that this stock has received both today, obviously, from trading down so much, but also, you know, in the past where many investors has hold this stock and talked about this stock for many times on social platforms. Anyways, thank you very much for watching. And if you like this video, please hit the like button and subscribe for more content. Thank you very much for watching. Goodbye.